Mm. Hello guys, this is a recording for Saturday webinar. I am currently tuning in at Vietnam, Hanoi. The hotel connection is a little bit better now, but I think it's better to do a recording rather than to do a live session now. Okay, hopefully you guys are able to see this by 9:30 p.m. like that, our usual timing lah. So this will be a very quick one because there wasn't any trade action that we have taken this week. We also did not enter any new trade this week, mainly because we are holding on to quite a lot of positions. So there wasn't a need to add more position to what we already have lah. Okay. Nonetheless, right, this week there was a very important event which was the Jackson Hole, and on Friday, Powell gave his usual conference regarding the macroeconomic of central banks on Friday, and then there was quite a big recovery in the market. Okay, so the recovery was mainly it seems like the September rate cut has been sort of pretty much confirmed already due to the labor market concern and in response to that, if you look at the overall treasury yield, right, all the treasury yield dropped quite significantly also, which sort of led to the rally lah. Okay, so if you look at the Fed watch, right, surprisingly, the probability for a 29 basis point cut is only 75%. There is still a 25% for no cut at all. And previously, before the Jackson Hole speech, the probability of the rate cut was significantly higher. It was 85%, 84%. But after the Jackson Hole period, it was like 75%. So, uh, from this perspective, I'm not really sure what is going on also. But I mean, it doesn't really matter what is going on now. Okay, the market rally, and we are in the position to sort of ride the rally. But I also do believe that if the market were to crash yesterday because of whatever stuff that Powell may have spoken, our portfolio is also in position to ride the down wave also lah. Okay, if you look at the previous week webinar, right, I have explained on IBKR on the risk management portion that you can see based on the portfolio chart. If the market go down by 10% or go up by 10%, my portfolio is positioned to profit regardless lah. Okay, so if you are following my position in a similar manner, you should be in a similar position also. The week didn't really start out very positive. In fact, if you look at the Nasdaq, right, we have one of the longest streak of red candles. In fact, there were a total of seven red candles before we had one recovery candle, which was yesterday lah. Okay, so this period, right, is actually quite sort of testing your patience, your perseverance as a portfolio manager. If during this period, if your portfolio is not sufficiently hedged, or if you are overexposed, if you are on very heavy leverage on all long position, then definitely you will get stopped out a lot of position. You'll be facing drawdown. You'll be losing a lot of money. But um, because we are doing a long short portfolio, right? We didn't really like care so much about that small correction that we have. So from the top until the bottom, I believe it was about 4% downside lah. Okay, 4% downside. So now 4% downside is very common. You will often see 4% downside on Nasdaq or S&P. Very, very common. It is part of it is considered within the one sigma, one deviation movement lah. Okay. Normally, much more natural correction will be like 5 to 10% like that. Those are more, I would say we will consider them as proper correction now. Okay, for example, like here, this is actually a proper correction. This one we actually dip into the bear market now. Okay, we went below 20%. But this kind is a proper correction also, this kind proper correction. So now if my point is, if you are already facing panic attack, difficulty, cannot sleep during this period, right? Then it goes to shows that your portfolio may be exposed to certain risks beyond your control, lah, okay, or beyond what you can handle, or it will also mean that you are not really doing long short. You are doing some strategy that I don't know what, but you are just copy trading what we share only. So just because you trade what we share, right, doesn't mean you are executing the same strategy that what we are doing. Okay. If I trade axometry, you trade axometry, doesn't mean we are both gonna get the same result. My portfolio is designed to handle downside, but your portfolio is just simply copy trading axometry only. There's nothing more than that. So um just simply following our trade copy trading is not sufficient if you want to survive market long term okay, so you have to think a little bit more about how you handle your risk management and all that, and you can actually see that on Friday, right, Russell 2000 went up 4%. It was the outperformer. S&P, Dow Jones, and Nasdaq went up about 1.5, 1.8, but Russell 2000 actually went up 4% because when it comes to interest rates, the small cap are much more sensitive to interest rates. So if there is going to be a rate cut, then definitely the small cap are going to benefit a lot more lah. And on top of that, having rate cuts will also mean that there will be higher discretionary spending now. Okay, meaning to say consumer will be able to spend a little bit more, which is why you are seeing quite a good rebound in stocks like Deckers and Lululemon and Global E Online also lah. Okay, so let's just go through the portfolio real quick. I will not be going through every single position now. Okay, so for close position, it is still the same. I did not close out any new position. Neither have I opened any new position. So what I am holding is basically the same as last week. Okay, but I do want to point out a few things. So now you can see that my floating PNL is now at positive 3%. So if you refer back to last week, right, I was about negative 3-4% like that, but now my floating PNL is about $3,000 like that, is positive 1% okay, meaning to say this week, even though we have like the first 4 day of the week was red candles and the final day was one big green candle, right, I was still able to manage. I was still, my portfolio was still able to manage to recover lah. Okay, so initially I was down about like negative 10,000 plus like that, but now I made it to positive 3,000. So this is also consider progress. Minimizing your losing loss and turning them into profit is equivalent to profit. So in this case, right, I have effectively prevented 10K loss and now I'm in 3K profit. So that's a 13K swing or 16K swing since I am positive $3,000. Okay, so that's a very big swing that came in. So you should look at your portfolio as a whole lah, okay, as a higher level. But you can also see as per individual position, right? You will be asking things like, hey, so then how about Dropbox? Dropbox rally, EchoStar rally, Advanced Auto Part rally. All the shots are rallying, and my response to that is, so what? So what if they are rallying? They are part of the hedging. If the overall market itself is gonna rally in a huge sort of like a very big wave where there is no discrimination on what is rallying, what is not rallying, everything just rally, right? Then there's nothing you can do about it. But in those kind of situation, your long are supposed to outperform your short. So even though I am losing more on my short position, my sets become negative 2,000. My Dropbox actually down to negative already. My Dropbox is actually negative right now. Then my AAP is still somewhat positive, a little bit positive, but most of my short position have went from slightly negative to more negative. But it doesn't matter because all the long positions are winning more than my short position. And how much did my long position win more than my short position? About 13K more, about 16K more. That's why you see the recovery here. So definitely you are gonna, in this kind of broad market systematic recovery, you are gonna see your shorts start to lose money, but it's okay because they are hedging position. And if your hedging position are losing money, it means that things are going your way, things are going in your direction. So you should be earning from all the other long position that you have. So even right here, you can see my S&P futures, which is a hedging, is a put option. It's also losing about $4,600. Previously, it was only losing about 1,000, 2,000, but now it has ballooned up to 4,600. But I don't care because my Alcoa is earning a lot of money. My like Axometry is still earning. My Deckers is going up. My Lulu is slowly recovering. My KRE, the regional bank ETF is recovering, my Credo is recovering, and soon all these positions are going to be in like 10K, 20K kind of profit. Whereas all the hedging position that I have, they are limited in risk. So if you look at AAP, this is actually a calendar structure, and calendar structure has limited risk. And if you look at SaaS, this is also a calendar structure which has limited risk. Same thing for Dropbox. Dropbox, you can see here, I have one also a calendar structure which is also limited in risk, but I also have one stop position now. Okay, so this stop position I can definitely set a stop loss in the future, but the loss is quite minimal, right? Sorry, I haven't updated the Dropbox price yet. Let me update 28.82. So yeah, my Dropbox position is now in like $3,000, negative $3,000. So it is still, I would say a manageable amount. If it goes to like 4,000, I'll probably cut my loss already. But even if it goes to 4,000, right, I would think that my long position will be gaining a lot more profit lah. Okay, so overall, my portfolio direction will still be going up, even though my shorts are losing money. Okay. So I'm not gonna go through all the shots like this one should keep, that one should keep. But personally for me, I am still going to keep all my shots because they have limited risk. Once they hit the so-called the maximum risk, right, then they will stop losing money already. But whereas the long will still continue to make money. So I am still sufficiently exposed to proper hedging, but at the same time, I can count on my long position to earn more than the amount that I spend for my hedge lah. Okay, so with this system in place, right, I don't really need to scare if market suddenly U-turn for whatever reason, because you can't really sort of like tell also. It's quite volatile at the moment. Maybe tomorrow some news might come out, Monday some news might come out, and then market suddenly U-turn, you also wouldn't know. So it is still important to have a sufficient hedging position in your portfolio and not suddenly go all in long position kind of play lah. Okay. So I am gonna keep all my long position, and for sorry, all my short position, and for the long position, right? I believe that for now you can definitely enjoy the ride, make hay while the sun is still shining. So Alcoa is up about 7.35% like that. So it's really quite scary. One day it will go up 6-7%, the next day it drop 5-6%, and the next day it goes up 6-7% again. But it has been in a sideway movement for quite some time now. Okay, and that sideway range is actually pretty big. If you look at the support level to the top, right, it's about 13% like that. So it is quite a big range lah. But hopefully with yesterday movement, right, it can continue to break out above this range here, and then it goes to like $35 or $40 lah. Okay, so if you look at my Alcoa, right, it is a very big position. It is 4,000 shares. 4,000 shares at $30. So it is $120,000 in total worth of Alcoa stocks. And if it goes to $35 or $40, right, the amount of profit that I'm getting is quite significant, okay? Or $35. It's actually quite a significant amount of profit that I can get. So let's hope that it can go up to that level, okay? And there are some news regarding Canadian tariff also, but unfortunately, even though Canada on Friday says that they are reducing certain retaliatory tariff on US, right? That does not include aluminum, lah. Okay, they are still keeping aluminum tariff against US. So I'm not really sure if that will affect Alcoa next week, but it does seems like Alcoa is riding on the lower interest rate, the optimism also lah. So I think it can go a lot higher. Credo is like um it dropped a lot, but it recovered back up. So Credo is actually a credit play. So as long as it kind of swing between like $95 and $135, I think we are pretty safe lah. Okay, but one thing to watch out for is that the earning is coming on 3rd of September after market. So I'm considering to exit before the earning, or maybe we can hold for earning also. We see how lah. Okay, if we are holding on to significant profit, right, we can actually exit at before the earning, and then we use that profit to YOLO the earning, and then we see how much money we can get from the from the earning. So that's the one play that we can make also. So I have covered Alcoa and Lulu ready. Sorry, Deckers and Lulu ready. So Deckers is now very close to our strike price at 110. So you can see how much the position actually recovered. Now it is in positive $2,800 profit, very close to $3,000. Okay, so once it exceed 110, right? Very likely maybe we are gonna get a full premium. Okay, but if we get assignment, the assignment is fine also. We can start selling cover call. So I mean, I don't really care what happened either way lah. Okay. So, but of course, if we start to rally aggressively, right, then we may miss out on the potential, what do you call it, the potential capital gain also lah. So I may consider adding more position onto Deckers if the upward momentum is still there. Next, Lululemon also quite similar. As I mentioned, right, I believe this should be the bottom, lah, okay, and hopefully we can do some some kind of a recovery towards 240 or at least 280 like that. And earning is also coming out on 4th of September, so this one, be mindful also, okay, make sure you don't have a very big position that may get affected by the earning. The other one is Toast. Toast also dropped quite a while and then suddenly recover back up, lah. Okay, so we are still good to hold on to Toast. Next one, Global E. Global E recovered quite a bit, but our long position strike is actually at $40. I believe that we can hit $40, but if we hit $40, right, we are basically trying to break even on the trade lah. Okay, but from now until $40 is about 22%. So if it is going to rally 22% to $40, right, we don't really want to just break even on our existing position, but I mean, we want to earn something from it. So I'm also considering adding additional position at this bottom here in order to like sort of gain something from any future rally. Okay. So now the tricky one is this one, the regional banking ETF. So our calendar strike price is at 65. It is very close to 65 right now. So you can actually see my KRE, right? Where's my KRE? You can see the long side is gaining $15,000. The short side is actually losing $14,000. So the swing here is actually very big. So you cannot simply eat the loss. If you eat the loss, you're gonna eat $14,000 loss. Then later KRE start to decline, right? Then your profit disappear, right? Then you may end up losing like $30,000 like that because you dismantle the calendar lah. Okay, so I do not recommend anybody to go and dismantle this calendar. Keep this calendar as one single structure. But if it goes higher in the next few weeks, right? Let's say it go to $70, $75, then this position may actually end up losing money. So what I feel is that maybe we should add more call option onto our position in the next week in order to prevent this position from losing money lah. Okay, we see what we can do. We see what we can do about this position next week. So currently the most important position that we need to take care is this one lah. Okay, so aside from this, right, I don't really have any other things that I want to mention. Just hold on to all your position right now. The short positions are fine based on what kind of structure you have. If they have maximum risk if the maximum risk is limited, right, then you don't really need to worry about that. You just let them be as the market recover, as the market continue to rally, right? Your long positions are going to sort of bring you a lot more profit than what your short positions are losing, lah. Okay, and of course, this is how we actually make money. So hopefully this will cover what we have gone through this week. I would like to emphasize again the importance of holding a long short position so that you can confidently hold through corrections. And I would like to also warn that this little movement that we saw this week is a very tiny correction. And if you cannot handle that, you truly need to revisit your portfolio lah, okay? Because who know, a much bigger correction, right? Your portfolio might get blown up already lah. Okay, guys, so that's all I have. Have a good weekend. And for those who have signed up for the course, your course will be beginning next Saturday. Okay, you should have received some preparation email ready. So, if you are coming for the course, I hope to see you guys next Saturday. Have a good day and have a good weekend. Thanks, everyone.